Thank you for joining me. I'm Alex, and I want to talk about Walgreens. So, what they do is mostly pharmacy and retail. The retail part is mostly just overpriced, kind of like a convenience store type thing. Obviously, cigarettes, which for a pharmacy is kind of weird, but you know. Current price $47, which gives them market cap of $40.7 billion. Dividend is 3.89% with a payout ratio of about 350%, which is not great necessarily. Revenue $139.5 billion, earnings $456 million. Quite the significant drop there, almost 90%, but you know, what can you do really? Trailing 12 months look even worse. Currently PE of 78 with a forward P of 10, and obviously if they can hit that would be pretty amazing. The payout ratio would obviously be 40-ish%, so if they can hit that's quite decent. Total assets $87.1 billion, total liability $66 billion, which gives them a total stockholders equity of $20.6 billion, which is slightly down, to be expected, but I don't really understand how they add $20 billion to their balance sheet on both sides. What can you do, right? So obviously if they invested that money well, then I greatly approve of that decision. That doesn't make the balance sheet any better, though. I really much like the assets to liabilities ratio that they had before, or rather I liked it better. Still wasn't great. So risk factors, Amazon, trying to get into the pharmacy business. They're still not doing things right, and they obviously have a lot to catch up on. But if Amazon actually did enter the pharmacy business correctly, I think there could be significant damage done to Walgreens, Rite Aid, Walmart, many others. But overall, I think that for now, Amazon isn't really that much of a factor, but obviously with them looming, it's kind of a problem. So it's really hard to have a business with Amazon trying to get market share, because obviously they have a lot of funds and they can do a lot of stuff. They can probably do a lot of stuff very quickly as well. So that's a problem. But overall, obviously for a growth investor, there's just nothing here. Where can your revenue really go when you're already at $140 billion and you're a brick and mortar retailer? That's like a quarter of what Walmart does. It's hard. So growth investors probably out. For a dividend investor, almost 4% dividend is pretty nice. If they can hit the forward PE, the payout ratio is also pretty nice. And the balance sheet is There's some growth. So overall, I think it's very interesting for a dividend investor, just for the currently anyway huge dividend, and the reasonable payout ratio if they can hit that forward PE. For a value investor, the balance sheet is but forward PE of 10, very nice if they can hit that, and the dividend is just a nice bonus on top of that. So overall, I think that for both dividend and value investors, it really pays to have a closer look at this and kind of figure out whether or not they can hit that forecasted PE. If you don't think they can, or if you think that they're going to lose market share, I really don't think that this is necessarily a buy. But they've been in this game for a very long time, so you would hope that they know what they're doing. So I think that it's a pretty interesting stock and definitely worth a closer look. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.